On Friday, Elon Musk's SpaceX, currently the world's most valuable private company, is going public via a listing on the Nasdaq under the ticker SPCX. If all goes to plan, SpaceX will raise $75 billion at a valuation of about $1.75 trillion, making it, by some margin, the largest IPO in history. The listing has generated some predictably breathless headlines in the financial press. According to the bulls, it represents a once-in-a-generation opportunity to invest in the world's first truly extraterrestrial company. But it's also generated a fair bit of skepticism on the other side, and not just because the numbers involved are optimistic, to put it mildly. So in this video, we're going to explain why at least some people think the SpaceX IPO looks a bit dodgy, and why, from a certain vantage point, it's not obvious why SpaceX is even going public in the first place. Anxieties about material self-sufficiency, a turn towards protectionism, great powers asserting their spheres of influence, this all looks suspiciously similar to the build-up to the First World War. In the latest issue of our magazine, we explore the remarkable parallels between now and then, and ask whether we can avoid a third one. That's just one of 80 pages in the magazine, because there's more in too long than you'd expect. Purchase your copy by clicking the link in the description. So before we get into it, we should say that, if you like this sort of topic, we're planning on reviving TLDR business in the next couple of weeks. So go over there and subscribe if you want to be notified when we do. Anyway, as we see it, there are at least 3 reasons you might be a bit wary of the SpaceX IPO. The first and most obvious are, well, the numbers. In short, the implied valuation of $1.75 trillion is about $500 billion more than the $1.25 trillion that private funds who are already invested in SpaceX currently price it at. Nearly 5 times the $400 billion or so it was valued at only last year, and would make SpaceX one of the most valuable companies in the world. This is despite the fact that, unlike basically every other company on that list, SpaceX currently makes a loss. Specifically, SpaceX made a loss of about $5 billion in 2025 and has already burnt through over $4 billion in the first quarter of this year. To put that into context, Meta, which is currently valued at about $1.5 trillion, made a $60 billion profit in 2025. Even if you just look at revenue, things don't look great. SpaceX took in slightly less than $20 billion in 2025, which means Musk is asking for a valuation more than 90 times the company's revenue. For context, no other company in the trillion-dollar club has a price-to-revenue ratio anywhere near that. The second reason is that it looks like SpaceX underwriters are talking it up, to a suspicious degree. For context, people often talk about an IPO as if the company in question just creates a bunch of shares and then sells them directly to the public. But the actual process is slightly more complicated. Before the shares are actually available to the public, the company hires investment banks, known as underwriters, who become responsible for both pricing the IPO and finding what are known as the initial buyers, usually financial institutions with a pre-existing relationship with the bank, who buy the majority of the public shares. Anyway, in SpaceX's case, the main underwriter is Goldman Sachs. There's nothing wrong with this per se. The dodgy bit is that it looks like Goldman Sachs have been trying to generate positive headlines for the IPO. A couple of days ago, for instance, someone at Goldman apparently leaked some super bullish forecast to the Financial Times, under which SpaceX's AI revenue would increase 100-fold by 2030, and its total revenue would increase 25-fold over the same period. A day later, Morgan Stanley, another bank that's acting as a junior underwriter on the IPO, leaked an even more bullish forecast to the Wall Street Journal, claiming they could see SpaceX's revenue reaching $3.4 trillion by 2040. For context, that would be about 200 times SpaceX's 2025 revenue, and far more than any company today. Now, to be clear, underwriters do often produce optimistic projections when they're selling a deal, and that is, to some extent, their job. But they don't usually leak the most optimistic ones to the press just days before the IPO is due to go live, and these projections look speculative to the point of suspicion. The third and final reason we might be wary is that it looks like SpaceX is going to be fast-tracked into various index funds. For context, an index fund doesn't pick stocks, it just buys every stock in a given index, in proportion to its size. Usually, indices have what are known as seasoning windows. In other words, they don't let new companies into the index until they've spent a bit of time on the public markets. The S&P 500, for instance, which tracks the 500 biggest companies listed in the US and is the most popular index in the world, requires 12 months, as well as quarterly profits. Similarly, the Nasdaq 100, which tracks the 100 biggest companies on the Nasdaq Stock Exchange, has historically required a waiting period of around 3 months. The dodgy thing here is that a number of big indices have recently changed their entry rules, presumably to allow SpaceX in early. In March, for instance, Nasdaq introduced a new fast entry rule, which would allow SpaceX to enter the Nasdaq 100 15 trading days after listing. Since then, FTSE Russell, MSCI and CRSP, whose indices are tracked by trillions of dollars in assets globally, have all confirmed new fast entry rules that are clearly designed to get SpaceX into their indices early. Collectively, these rule changes mean that at least $20 billion worth of passive money will be redirected into SpaceX stock in its first few weeks of trading. This looks a bit like SpaceX and Musk, who initiated discussions with major index providers back in February, are pressuring indices to change their rules in order to essentially take advantage of passive investors. Now, at this point, you might be thinking that the implication here, that big tech companies and banks are trying to take advantage of passive and retail investors, sounds a bit conspiratorial. And well, it does, but it's worth asking, why else would SpaceX be tapping the public markets? After all, it's not like SpaceX struggles to find lenders in the private markets. Financial institutions like private equity and hedge funds have proved willing to lend at competitive rates and generous valuations. In fact, SpaceX and other big private companies were finding it so easy to find lenders in the private markets that, until only a year or so ago, lots of financial commentators were suggesting that public markets might be becoming redundant. In the past, listing on a stock exchange might have been the easiest way for a company to raise large sums of money. But these days, the argument went, because the private markets are so deep and well developed, companies can raise absurd sums without the hassle of going public, which means regular audits, financial statements, and more public scrutiny generally, hence the paucity of IPOs between 2022 and 2025. The question that SpaceX bulls have to answer is, what's changed? Why has SpaceX decided to move from private to public financing, if not to exploit the apparent naivety of retail investors and the inattention of passive investors? Maybe there's a good reason. Maybe it's just that private markets couldn't find the billions required for a Mars transportation system, satellite networks, and off-world settlements. But on the other hand, maybe there isn't. When a story like this breaks, the headlines aren't just fast, they're fragmented. Depending on where you get your news, you might be seeing a completely different version of the same event. So, how are you supposed to know who and what to trust? It can be overwhelming trying to read into language and tone to figure out a particular bias. Well, luckily, Ground News will do all that work for you. Ground News is a website and app that helps you make sense of the complex and ever-changing media landscape. With thousands of articles being thrown at us every single day, it may feel impossible to just understand a story, never mind fully comprehend the bias behind each outlet. Well, Ground News puts all of those articles into one place, finally giving you an effortless way to consume news and digest media bias. And within each article, you can even find comprehensive breakdowns into the ownership, bias distribution, and factuality. Take this story on SpaceX's IPO, for example. We can see that there are 273 sources currently reporting on it, with most of the coverage coming from the centre. Taking a look at the headlines, we're able to understand the differences in reporting on each side, with the left highlighting the company's financial losses and the right referencing Musk's trillionaire potential. And it's not just the stories we see that shape the narrative, it's the ones we don't. With Ground News' blind spot feed, you can see all the stories you might not have seen on your feed, both local and international, keeping you fully informed even outside of your media bubble. And this is so important, as a Duke University study finds that exposure to news blind spots can moderate positions and reduce issue polarization. So, if you want to start questioning the narrative, you can join Ground News today, and using our link, you'll get 40% off their unlimited access Vantage plan. All you have to do is subscribe through the link in the description, go to ground.news/TLDR or scan the QR code on screen, and you'll be supporting an independent news platform working to make the media landscape more transparent.